Empowering farmers with intelligence. EFL AG-DATA presents to you. Hello everyone, welcome to the EFL AG-DATA podcast, and we are continuing with our podcast series on the impact of tariffs on U.S. feed ingredient exports. And you can follow this discussion in the resources section of our website in EFL AG-DATA. And of course, joining me today is our resident market expert, Matthew Clark, to discuss the domestic market dynamics. Hello, Matthew.
Hi, Alvin. Good to be back.
Yeah. So let's continue on with the discussion. Looking inward, what's the current supply and demand situation for feed ingredients in the U.S.? And maybe you can tell us if there are, any trends that might impact the export capacity.
Oh, I think there are. There's some obvious trends in the amount of corn and soybeans coming onto the market, but we also have to look at the U.S. government initiatives to take livestock produce or farm produce into the industrial market. We're talking about biodiesel, renewable diesel, and ethanol. So we're seeing facilities going up in the U.S. that are going to take some of the surplus off the U.S. market, particularly now we're looking at the oils. It seems like the ethanol market is more or less static in terms of U.S. demand, but oil is definitely going up. So that's one dynamic there. Production costs in the U.S. are fluctuating quite a bit. It's getting difficult for some farms in some areas to maintain profitability because there is a general, let's say, relaxed supply on corn and soybeans. So it's cutting. The pricing is cutting down to marginal profit areas compared to the previous, let's say, golden years. If we look at tariffs coming in on top of these low price markets, it could have a heavy structural impact on U.S. farmers. By structural impact, I'm looking at farms maybe not being tough enough to survive a prolonged low price market. We have to wait and see, but it's sensitive now. If tariffs kick in, it could be quite a bit worse.
Yeah. Well, I want to ask about the farmers' response to this. Are the farmers adjusting their production strategies in response to these uncertainties?
To a certain extent, yes. Let's remember, though, that it's not possible for a farm to, say, move from corn to soybeans or soybeans back to corn. They're in fixed rotations. They might expand their break crops, I think, and gradually reduce volumes if the market becomes very, very meager, which it might well do. We could also be looking, I think, at different oilseed crops. Soybean is the backbone of the oil industry in the U.S., but it's only about 18 to 20% oil yield. There's others like canola meal that are quite good crops to grow, have similar oil yields per hectare, and it's the oil that's bringing in the money. So I'm guessing we might see more of these, let's call them exotic oilseed crops coming into the rotations in the future, because the market for the meals could well be saturated.
All right. Well, thank you, Matthew, for sharing your insights on that one. I'll be looking forward to more information in the next episodes.
Great, and we'll look forward to discussing how 00 rapeseed is going to increase in volume, because that's one I'm watching. There are plants going up in America that are getting ready to process this stuff. So interesting days we live in. Thank you. Mm-hmm.
And to our listeners, thank you for tuning in to another episode of the EFL AG-DATA podcast and our series on the impact of tariffs on U.S. feed ingredient exports. Please continue to tune in and visit our resources section in the EFL AG-DATA website. Stay tuned, stay informed. Until next time.